Welcome to the Healthcare Payment Network podcast. Why is paying and getting paid for healthcare so hard? Why is it unaffordable for most Americans? And most importantly, what are we going to do about it? Whether you're a provider or industry professional, ultimately we are all patients. This podcast is a conversation on how we tackle one of the most challenging problems in our society, paying for healthcare. Here we'll discuss new innovations and fresh perspectives from the people working to make paying for healthcare easier and more affordable. Let's dive in.
Welcome, everyone, to the Healthcare Payment Network podcast. My name is Andy Rellihan, and with me today is Itzik Cohen, CEO of PayZen. Itzik, welcome to the Healthcare Payment Network podcast.
Nice to be with you, Andy. Thank you.
Yeah. The goal of the podcast is always to talk about how we pay for healthcare. It's to have a conversation about all the complexities, the friction, to simply get the care we need, and on the flip side, for providers to receive the reimbursement, the money that they need to sustain, their operation, to provide services in their community. And so we started this a handful of months ago, and the goal has always been just let's have a dialogue. Everybody has a different perspective on this, and we love bringing different perspectives. And what's really, really interesting is you guys are out there in the financing world. And so, you know, why go start a financing company? There's lots of banks, there's lots of people that provide it. What drove you to start and really look at how financing occurs within healthcare organizations today?
So, Andy, you said a few very important things in your introduction. I think the problem that we saw was evident to everyone. Essentially, paying for healthcare is confusing, but it's also unaffordable. And even when you get the right bill that is explained to you, in many cases, sometimes you can't afford it. When you look at the rise of the high deductible health plans, different types of co-insurance, co-pays, out-of-network fees, at the end of the day, more and more of the payment responsibility has shifted to the patient from the payer. And you're right. I mean, it's not a good deal for the patient, and it's not a good deal for the provider. Let's not forget, providers are very important. They need to be afloat. They need to run a business that can support their operations and sustain their existence. And currently, it's not sustainable, not for patients, not for providers. We identified that there's a very large portion of the population that if you would give them a flexible payment option and will not add cost in the form of interest or fees to their payment, more people will likely pay their bills because most people are decent at trying to pay for their obligations. And what we realize is that they're not really very technology-forward solutions that identify the right population that will likely pay if you would extend terms to them that are more likely they can afford. And essentially automate the entire process because, as you know, providers don't want to add more bodies to solve problems. They don't want more manual processes and administrative tasks. So whatever we build has to be automated and autonomous and be very technology forward. So that was the data we saw. We saw that it's not sustainable. Our background is fintech. We know how to underwrite patients and people for their capacity to pay. We identified the right patients at the right time and started a product that I think is a no-brainer for most people and providers, which basically says we approve everyone. So there's no declining people. No matter what your credit score is, your income is, we will find a payment plan that will work for you. We will never charge interest or fees. And so we will not add costs to your healthcare. And for the provider, we offer a variety of ways to finance these payment plans using our AI-based risk-based pricing. And so far, we've proven that in the last 5.5 years of our existence, there's a big need. We found very strong product market fit. And the one thing I'll have to add is that, you know, we started from a finance view, and 2 years ago, we shifted from finance to affordability because we don't believe you can solve the entire affordability problem just with lending or financing. There's
Sure.
a lot more automation that is required that we're capable of doing, including processing people for financial assistance, for example, applying discounts or bill cancellations based on um, their financial situation. Additional eligibility criteria can be automated as well using our platform because essentially we use a lot of data, we use a lot of automation, and that's what's missing from the whole process. Essentially, something that will give you an e-commerce like um, checkout, either pre-service or post-service, that will explain to you exactly what you're paying for, how you can afford it, and optimize all the things that you're eligible for to reduce your cost. And that's what PayZen is all about.
Yeah, it's so interesting that you said, "Hey, we went from lending to affordability," right? At the crux of it, it's like I need these services. Can I afford it, or am I going to delay treatment because I just can't afford it? And it gives me anxiety over that. And I think if you've been in healthcare and you've talked to healthcare organizations, that's a very, very real problem, right? And so as you guys started Payzen, what was the biggest obstacle to taking the more modernized approach, using all of the data? I mean, there's a lot of people that are lending, they're offering credit, but you guys are taking a really much more modernized approach, much more patient-centric approach. What was the obstacle to go from traditional mindset to a modernized mindset, especially in healthcare, where it can often,
So you nailed it, Andrew. I mean, Andy, I think the problem we had is that we're not from healthcare, right? So we had to learn quite a lot when it comes to how complex and broken the system is, quite frankly.
yep,
And we had to build a purposely built platform that would address that specific problem. And you're right. I mean, a lot of the problem we thought we were solving occur after you receive a bill, but you nailed it. A lot of the problems we see right now are actually happening pre-care because a lot of providers are trying to collect pre-service. And essentially what you see is a situation where patients realize they're going to have a $2,000 out of pocket for their procedure that provider is trying to collect on them to schedule the procedure, so they need a down payment or something. And a lot of people are just deferring their care. So you're reducing access to healthcare essentially by trying to collect pre-care if you don't offer an option that is affordable for people. So essentially, if you're trying to do pre-care, pre-service collections, and you don't offer some kind of a payment option that is affordable for people, it's just you're decreasing or limiting access to healthcare for most people you're talking to. So this is why we had our basic product, which is a payment plan product, which is great for post care. But now we have the PayZen Care Card, which is being offered pre-service, and you can actually put a down payment. You can pay as you go, multiple swipes, and again, it transforms into a payment plan as you go. So we just needed to adapt, and we have to start. We have to start with something, and we started with a product that is working very well, but we had to evolve and create a couple more products to address different use cases because you need to meet people where they are. And the use cases sometimes are not as simple as getting a bill and paying for it. Sometimes you will not get care if you will not put a down payment or pay for your procedure ahead of time.
yeah,
So essentially we needed to kind of address additional use cases.
yeah, yeah. And the lens we've always tried to look at is, well, what really goes on to go facilitate what the patient owes? Because oftentimes, well, had a baby, or my wife had a baby. We did that 4 times, right?
Congrats.
Right? Which is not four bills. It's the hospital bill, the OBGYN bill, the audiology bill, the right. And so you can have one revenue cycle system in your own health system, but you are dependent on so many people that are going to provide services within your hospital, within your network, that we tend to look at it like this is not a simple thing to go wrap your arms around, right? And we view financing and affordability as a huge, huge vehicle to go help augment what is a really, really complex situation. Has my bill been paid? Has my claim been adjudicated? Have all these things occurred that center on me? Because, we have to balance both what the provider and what the patient need, because if the patient's confused, they're not going to pay. They're not going to engage in anyway, right? It's going to sit.
Right. Right. Related to what you said, we actually measured people who enrolled into a PayZen payment plan in a 12-month period. Typically, I'm talking about guarantors. So
Yeah,
it might not be just one person, it might be a
sure.
family, but the one person that pays the bills,
Yep.
on average, would probably pay five more bills in the 12-month period. So you pay for one bill, you will get from the same provider around five more bills, either for different procedures or related procedures. It can be a radiologist, you're an anesthesiologist, you're a doctor. I mean, it can be a lot of different bills to find a product that can accommodate not just one bill, kind of one and done type of situation, but multiple bills, automated, let you know that your bill can be rolled into your payment plan already automatically. These are the features that we had to create based on learning, because if you just create a lending product, which is not the right solution, uh, you're just creating a loan. That's not what we do. We tap into a lot of data. We make sure that future bills can roll into your existing payment plan so you can automate the entire process for the patient. And no matter how many bills they're going to get, they'll be able to get the same type of automation and benefits from a non-interest long-term payment plan.
And so when you go have conversations with healthcare organizations, how did they receive that relative to what they're used to? I mean, and I'll tell you what I see is you go to the website, it says call for assistance. You go to, you have multiple different endpoints that you're forcing the patient into. So that's the obvious thing that you can see on the website, or where a patient might go. But what are the less obvious things around what benefit does that drive for a healthcare organization? How are they perceiving what you're talking about?
So we leaned on a digital interaction from the get-go. So we were not relying on phone calls, and we're not relying on paper statements. We're relying on automated interaction and engagement based on data that we receive from the EHR systems that we are integrated with. And patients will get automated either text messages or Epic MyChart type of integrate messages, or any
Yep.
other EHR we will connect with that can send messages. And we're doing it ahead of time. Essentially, you'll get a message to say, "Dear Andy, your recent bill with so-and-so provider is eligible for a non-interest payment plan. Click here to pay." You go, you log into your regular experience. Essentially, we're embedded inside wherever we are. We have integrations with multiple providers, including yours.
Yep.
Uh, and as you know, it's flawless. It's working in a very seamless way. You see your bills, you're getting underwritten. So we actually underwrite you based on your capacity to pay. We use over 30,000 different financial attributes to match you with the right payment plan that we know you can afford, that will not overburden you financially, and let you choose between three terms. You make your first payment and you're done. It's all automated. So essentially, we're doing the same thing for estimates. So we're talking about pre-service, right? That what I just described happened post-service. You already have a bill and now you have to pay it, but we're doing everything digital. We also tap into the estimate files in the EHR, And when you see an estimate coming due for you, we know that you're going to have to pay something in the future for your future procedure. So we send you the same message saying you can afford your new procedure. Here's your estimate. Here's how you can pay for it. And typically, the card is a much more appropriate product rather than just a payment plan. If you have future services that you want to pay for, which will include multiple swipes, longer pay care cycle, etc. So we have different products and different interactions with for different use cases.
Yeah, no, it makes a lot of sense. I mean, it's you start to go look at, well, what healthcare, especially, it's never a static environment, right? And so this thing called the big beautiful bill comes out, legislation comes out. Well, without getting into politics per se, what reaction have you gotten from, and how has it changed your conversation with healthcare organizations? We have certainly seen, hey, we're expecting bad debt to go up. We're expecting these things to happen as a result of the bill. Um, where does that lead the conversation that, ultimately they're probably looking at you guys as one avenue of what do we do?
Yeah, you don't have to get into politics to agree on facts, right? The
Yeah.
facts are that there'll be more uncompensated care, there'll be less coverage, and there'll be more bad debt, and that would lead to more pressure on providers, financial pressure on providers, and lack of coverage for patients. More patients are going to be without coverage, or at least full coverage. Um, the reactions we get from our customers is, first of all, a little bit of fear because, if you look at the operating margins for healthcare systems, it's not very large. I mean, I don't know. I guess last year was a little better, but it's hovering around 1.5% operating margins,
If you're lucky.
if you're lucky.
Yeah.
Obviously tariffs are going to eat into some of that because of some of the cost of supplies and
Yep.
etc. But now you're talking about a lot more uncompensated care and a lot more bad debt and a lot more need for solutions that are automated and can, ease the problem a little bit for both patients and providers. What we see is acceleration in a lot of the conversations we have, expansion in a lot of the systems that we're working with, and quite frankly, we came out with a specific product that is getting a lot of attention from providers, where we're helping them with liquidity pretty quickly. Um, it's the it's the only way we can support our providers. Essentially, just do a lot more, do it faster, do it more efficiently, and get ready for a lot of growth, because essentially that would lead for a lot more need, and that need will drive a lot of growth in our business.
Yeah. Yeah. Yeah, certainly there's a lot of anxiety around it. I mean, I think for an organization like yourself, it does create opportunity, right? Um,
I wish we didn't have this opportunity, quite frankly,
I
because
agree.
it
I
makes the conversation um, a lot more difficult, and we prefer to have a healthier system that will drive better outcomes. But we're trying to respond in the best way we can, and we're fortunate that our mission and our values are such that we're trying to bring financial health to healthcare, right? So it's not easy, but one thing I'll say is that we still haven't seen the full impact of
That's
the
true.
BBB.
No.
Some of those some of those artifacts are going to be seen next year, and actually the year in 2027 as well. So it remains to be seen how bad it's going to be, but I think that people are getting ready for it.
Yeah. Yeah, it's a big topic of conversation. And I appreciate the real, the empathetic, the human approach you take to this, which is like, yeah, it's the unfortunate necessity of where we're at in the system, and you want a system that feels like it has a better foundation and it's under a better financial footing. And
Yeah, I mean, look, I mean, in this business, you cannot start a business like PayZen or PayGround or any of these businesses that doesn't have a mission and grounded by values. And we're sticking to our North Stars. I mean, we'll never charge interest. We accept 100% of patients, no matter what the situation is. Never charge fees. We are optimizing our system all the time to create better outcomes for both patients and have a better impact for providers. It's the only way we know how to run the business like this because, being in healthcare, which is such an important human, um, need, you have to kind of be grounded, and the whole company needs to kind of walk the walk, not just talk the talk. So, you know, um, I'm very proud of what we created so far, and I think that you know, um, unfortunately, we have a lot of work to do.
lots of work, in the truest sense, though, it is opportunity, right? There's still an
Yes.
opportunity to go. You kind of look at it like, hey, we're at a point in time where we can solve it the best we can. And how do we then continue to look at and stay true to the values that you hold to say, how do we really solve this, right?
Yeah, yeah. I mean, I truly believe that innovative companies like PayZen, like a lot of the health tech companies that are in the space, the payment space, are the solution. Essentially, you can't expect very large health systems who are so large, who are in the business of providing care, not financial services, to solve a financial problem rather than a medical problem. So I truly believe that, companies like us who are, doing well by doing good, mission driven and very innovative and leaning on technology are part of the solution.
I agree.
So this is a tremendous opportunity for us to grow our businesses, but also create very positive impact.
I agree. And we talk about that as a leadership. We actually just had a leadership retreat last week, and we talked about that very thing, which is how do we lean on the values that we believe we have as a company to say, how do we create something that has real societal impact on the work we're doing? Yes, we want to grow. Yes, we want to grow our revenue. We want to create a good life for ourselves. Those things are true, but there's also this, hey, if we build it right and we keep building in this way, true to what we believe, there's a solution there, right? And we may not even know exactly what that is today, right? We may think we know, but all these sorts of things hit you in the face along the way that alter what you think, right?
Yeah, and it's a part of learning, right? I mean, we keep learning new things and new opportunities we can optimize, right? So essentially, once you have access to so much data, and it's a very unique data set, it's you know, you learn, and we keep iterating and upgrading our capabilities and trying to solve additional problems. I think this is what's going to make us better partners for providers and a trusted product for patients. Because at the end of the day, you need to be trusted to do the right thing. I mean, by patients and by providers. And yes, we're growing a very healthy business, and I think that's the right thing to do. I mean, we have to sustain ourselves as well
Yeah.
as a company. But um, the question at the end of the day is, what value and impact are you creating? And are you beneficial to both audiences you serve? And for us, it's patients and providers, and we need to add value to both audiences.
Yeah. Agreed. Totally agree. So if now all that said, if we take out the crystal ball and we just kind of forecast a little bit to say, okay, well, what does it look like, or maybe what could it look like into the future that has a better solid foundation? What do you think the future of healthcare payment looks like? How do we pay for this? so that we're not constantly looking at, not that this is what it's very clear that this is not what you guys are doing, but lending or other things that, just denying coverage, right? How do we get there? What do you
Look,
think it is?
I think what you'll see is a lot more automation. So with AI, when we're using AI everywhere, in our business, predictive AI, Gen AI. I mean, we're using a lot of AI. Everybody is starting to lean
Yep.
hard on AI. AI will drive a lot of automation. Um, what I think will happen in healthcare specifically, if you consider the fact that around 30% of healthcare cost is due to manual, repeatable processes that are administrative in nature, I think AI can make a significant impact on automating a lot of these. So you will reduce some of the healthcare costs in the system. So I think it's a systemic
Yep.
improvement that we can probably create. We're a part of it because we are automating eligibility criteria, financing, payment plans, access cards, and financial assistance, which is also very expensive to process these days. So, you know, automation is going to be kind of key. You will see a lot more of a digital experience that is more akin to e-commerce transactions. Your checkout experience is going to be a lot more seamless. The things you're eligible for will be known to you and explained to you in a very simple way. Because of all of that automation, it's all going to be pre-processed. I mean, that's my crystal ball. And I think your payment experience is going to be very similar to paying for an Amazon purchase. Essentially, you'll be able to choose from many different ways of affording whatever it is that you're paying for. You'll have multiple options, and you choose what's good for you and what you can afford. Essentially, that's what I see. I think the future will look like. So I think a systemic reduction in administrative costs is going to be a part of it, and I think that a much more digital experience that is similar to e-commerce will be another one that's going to be more of a standard.
The thing I love that, and the thing I would add to that is right now, the missing link is we don't truly shop for our healthcare. My care was handled by a broker who negotiated with an HR person who I'm third in the ranking of that, right? It went the broker with the health plan to my employer to eventually me, and I'm told, right?
Yeah,
And that's no knock on the health insurance that I have. It's just the reality for most people, that's how we consume it. It's either that or, the government dictates it. So either way, there's all these intermediaries that sit in the middle of I have care that I need and I want to pay for that care. And I think if I kind of connect the dots between how I'm thinking and what you're saying is automation and AI can solve a lot of those things to get a lot of these intermediaries out of the way that cost, if we spend $5 trillion on healthcare, it's kind of cost us about 1.5 trillion just to manage all those bridges that do nothing to add value to the experience. And if
yeah,
we if we
it's
got rid
over.
of those and focus that's more money for the providers and less cost for the patient, which is the ultimate win-win.
Yeah, it's obviously it's unnecessarily complex with too many moving pieces that don't really speak well to one another.
Nope.
And at the end of the day, it's confusing a lot of people and limiting access. So I agree that a lot of improvement needs to be there. But what I'm focused on is not the systemic problem.
Yep.
I'm trying to kind of go deep on doing our job in the best way we can. I believe a company should do one thing and should do it very well. And the one thing we're focused on is, you know, take care of affordability, close the affordability gap in the best way we can.
I think you're right on. You guys are on your way. You've been a good partner to PayGround. I think we're doing a lot of exciting things together, and I'm really, really excited to see specifically in our journey together what comes next because I think we're trying to solve the same problem from two slightly different lenses, and I think we're better together.
Absolutely. You've been a great partner.
Yes, yeah. Well, it's been a really, really fun conversation listening to your perspective, and I can't thank you enough for having on. And
Thank you,
um,
Andy. I really enjoyed it.
yeah, look forward to what's next.
Thank you very much.
Thanks for tuning in to the Healthcare Payment Network podcast. We hope you found today's discussion insightful and valuable. Don't forget to subscribe, leave a review, and share this episode with your network. Stay connected, and we'll see you next time as we continue to explore the future of healthcare payments.